Well, tech is lifting the broader markets today. Nvidia's rally sending the S&P 500 and NASDAQ to fresh intraday highs. Joining me now is Doug Clinton, Intelligent Alpha founder and CEO. Doug, it's so interesting because we have this going on, and at the same time, there's this big event expected in Pennsylvania. We've been getting little trickles of announcements out that various companies, including Google, are going to be spending more money on data centers and on power investments for those data centers. So when I want to get like a sort of a temperature check on the AI trade, I think of you. Kind of where are we in the cycle right now, and how should investors be thinking about it?
I would say the temperature is probably a little bit elevated right now, Julie. I mean, you think about AI over the last 2 years, it's felt like this sort of nonstop train where we've had increasingly impressive model releases from the large model building companies. We've had, to your point today, energy investments, companies building gigawatt investments in energy. Meta, as an example, right? Microsoft, Amazon, all of them are trying to make sure they have enough power for their systems and their chips. And so I think that we're going to continue to hear a lot of news about AI over the next 3 to 5 years. We still think we're in the midst of a 3 to 5 year bull market for the AI trade. To your question about temperature, though, I think if you think about that long term, think about 3 to 5 years, and we think AI has this kind of up and to the right trajectory. Along that trajectory, you will have times where you sort of undulate above and below that long-term trajectory. I think we're probably above that right now. So we are heated. We've had a lot of AI stocks up 100+% in the last few months. And so maybe it's time for things to cool down a little bit, but don't miss that long-term trade. That's the way that we're approaching it.
So I guess it depends on what your investment horizon is, right? If you're looking over the longer term, maybe there's still room for you to get in. And you guys, you use fundamental analysis, but you also use AI analysis to help you choose stocks. So I know AMD is one of those that you're looking at. And in addition to Nvidia getting the go-ahead or expected to get the go-ahead to reship into China, AMD has said it expects to get a similar approval. Is that a potential catalyst here, or what are you looking for big picture?
It is a catalyst for AMD. And I think AMD, it's funny, the story has always been for the last year plus that everybody who is building these data centers, they want an alternative to Nvidia. We just want diversification in the supply chain. And AMD has always been the best bet to be a second option. Their chips haven't really delivered. There hasn't been as much demand, I think, as people had hoped for them. And actually, that story hasn't changed, but we've kind of come back. It feels like the stock sort of got washed out. All of the optimism that I think there was that they would really become this second player last year is gone. And now the story, it's kind of come back a little bit, where they just announced their MI400 chip. Sam Altman was on stage at that announcement. And so they are trying to push some of these bigger partnerships. And I think it's one of those stocks where if they can get some momentum in their fundamental business, then this is one that could have maybe better longer term upside, think about it, 6 to 12 months, than Nvidia, because it's not valued the same way.
Let's talk about another one that we don't tend to talk about as much. I believe it got an analyst upgrade today. That's GitLab, which is sort of in the development ops, right? What exactly, first of all, I guess, what exactly does GitLab do, and how does it fit into this whole thesis?
GitLab does, that's right. DevSecOps is kind of the industry term, but the way you can think about it is they're sort of a direct competitor to GitHub, Microsoft's company that they acquired several years ago, that just helps coders basically manage their code bases, collaborate on developments that they're building. The thing that GitLab, I think, is trying to do to separate themselves a little bit from GitHub and some of these other coding assistants we're seeing, like Cursor, for example, $9 billion private company, is they're really focusing on the security angle that they have built into their software and built into their platform. And again, I think like in AMD, which we actually own both of these stocks in our long-short hedge fund at Intelligent Alpha, like AMD, if they can start to get a little bit of traction with their customers here, I don't think there's a lot priced into the stock, and I think that could move things higher. Marvell, sorry, is another one that you guys are looking at here. And, this is also one that has been bid up, certainly, and that people have been looking for around this AI thesis. But what do you think is next here? What Marvell really needs to do is answer this nagging question that they've had about Amazon as a customer. It feels like it's sort of a never-ending story about whether Amazon is going to continue to really build products with Marvell or not. And I think that's really the overhang on the stock. If we can kind of get some clarity on that situation, it doesn't feel like a positive outcome is priced in here. But I do think there's going to be a ton of demand going back to this idea of a second source of chips, right? AMD for the general purpose GPU, that's the best solution. Companies like Marvell and Broadcom, what they actually help companies like Amazon, as an example, do is develop their own custom silicon. I think there's going to be a continued large demand for that custom silicon. Marvell is the second place player to Broadcom in that space, but I think they could have a tailwind there if they could get some new customers. That would be incredible for the stock.
Another stock I wanted to ask you about, Doug, is Meta, because sort of more visibly and publicly than any of the other AI players at the moment, it has been throwing money out there, right? It's been throwing money at talent, it's been throwing money at CapEx. What do you make of that move, and is that a good or even necessary investment for a company like Meta?
Mark Zuckerberg he's the ultimate wartime CEO. When he sees an opportunity, I think he attacks it really like no one else. And to your point, I mean, they've probably spent several billion dollars, or at least allocated several billion dollars in just the last month or two to high-end AI talent. Because I think what Mark Zuckerberg was seeing was that their model Llama was hopelessly really trailing at this point the competitive products from OpenAI, from Anthropic, from Google, from xAI, and he just needed to take a shot to try to get back into the race, and that's exactly what he's doing. It's funny from a company perspective. I actually think Meta has done better deploying AI internally than maybe any other company. They do a great job, I think, building ad products that are powered by AI to help their customers get better results and spend more money on the platform. But as a model builder, they've been woefully last place, in my opinion. And so if they can get something going in the right direction there, that might be good for the stock. It hasn't been a conviction pick in our AI models more recently, but I think it's definitely worth watching.
It's so interesting that you frame it as him being a wartime CEO, right? This sort of idea that we're in an AI war right now amongst these companies. Do you think that there are going to be clear winners and losers, or do you think that ultimately the market's going to be big enough that there will be a piece for all the players? I mean, what are the stakes here?
I think there's always winners and losers in these huge, sort of world-changing markets, which I really do believe that AI is. I think that ultimately you probably have space for something on the order of 2 to 4 really competent foundation model providers, right? And maybe 2 or 3 infrastructure providers. And so everybody is trying to get their seat at the table for those winnings. I think that ultimately, if you think about, say, the consumer AI opportunity, sort of a personalized AI, I think you could have well over $1 trillion a year sort of revenue opportunity out there where customers are paying, whether it's 20 to 50, maybe even more dollars per month to have an AI that can really act as a personal assistant, a true personal assistant that's useful, that really gets things done on your behalf. So I think that's a huge market. And we have OpenAI, we have Google, I think we have Meta probably thinking about that game to some extent. So the stakes are very high, but I think there will only be a narrow, low number of winners.
How far away are we from maybe seeing that kind of future?
I think we're starting to see the inklings of it now. What we've had over the last 2-ish years has been sort of the emergence and the evolution of these models from something that was like, hey, this is really cool, you can chat with an AI model, to now they're actually capable of doing things like writing code. It's hard to get them to do it, but they can do things like buy airline tickets, they can order DoorDash, right? So it's kind of there if you really want to do the hard work to get it to work. I think for the average
Nobody wants to do the hard work to get it to work. That defeats the purpose, Doug.
That's Julie, that's the $1 trillion opportunity, is can one of these companies make it easy?
Right.
And I think that we're probably 6 to 12 months away from really seeing that kind of easy button where you can just go and it just works for you.